Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. We're taking a look at where we sit just 5 days into September. And, in the backdrop of what's happening in September, we know that there tends to be a lot of weakness in this month. But, we can't account for the nuances that every year we're going to go through now. So for this particular year, this particular September, we have the first of a series of highly anticipated rate cuts starting in 13 days. Most of that's been discounted, right? So if you're wondering, Rog, do the rate cuts keep some bullish optimism alive and well in the indices, in the stock market? Yes, and this is what I'm hypothesizing. Two things have to happen. One, the Federal Reserve has to be pretty clear about this being the first of at least 7 quarter-point cuts that we're going to have. And the other part of it, and this is a little bit more on my wish list, but this would help a lot in terms of expectations, is the Federal Reserve has to dump this really, really strong allegiance they have to data dependence, because that means every meeting is a live meeting. Every meeting is a will they, won't they. And not that that's a bad thing, but it's going to make all of us have to keep an eye on every CPI, PCE, non-farm jolts. And then now we're adding back in the consumer. We really haven't been as concerned about consumer data, whether that be pending or new home sales, retail sales, consumer sentiment numbers. Those have been on the back burner in favor of employment numbers and in favor of inflation numbers. Speaking of employment numbers, we've got some tomorrow before the bell, 8:30 a.m., non-farm payroll. There are 3 headline numbers that come out with that: the unemployment rate, the NFP itself, and the average hourly wages. And then the non-farm payroll release is enormous. It usually takes about 12 minutes at least. I found 10 to 12 minutes to fully digest. But those headline numbers will create most of the volatility that we all know and love. All right, so where are we in terms of the S&P? Look, gang, if we step back and look at where we are, this has been a very good year. This has been a very strong overall performance from the S&P. We had fantastic trading for the first 3 months of the year. We had really what you could consider very good trading from about mid-May to mid-July. So we've had pockets of very nice trends, but we've also had pockets of this chop. We can see the chop from April into mid-May. We can see the chop here that started in mid-July, was sort of exaggerated by that Japanese yen and carry unwind, but we're right back to where we were. So let's just presume that what was supposed to happen, sans this black swan event, which, by the way, gang, it cracks me up when folks think, hey, here's a black swan setup. Black swans inherently mean we don't know they're coming. So, some trick that is. But anyway, we didn't know this was coming. So if you were just to imagine erasing that little window of the yen and the carry, well, this is where we would have been, into mid-July to late July, and that's pretty much where we're holding. So this is just a holding pattern below 5,800. 5,800, gang, that's 1,400 higher points than we were in Q4 of last year. So it just cracks me up, the persistent bearishness. And I got to tell you, gang, it's an opportunity cost, right? When we're going to sit around thinking, oh, but yield curve inversion. That happened back in late 2022. This is what I mean. So we just take the index for what it is. And what the index is right now is really very much being led by financials and by healthcare. They're still a little rocky, but financials and healthcare have been very, very much the beneficiaries of flow at the end of August. I'd throw industrials in there as well. So those would be places that we want to keep an eye on. All right. So if we have any questions, let's see, feel free to type them on in. And if you don't know already, I do have tomorrow I do have plans to release some more of the trades viz. So some of you might have already seen that Tuesday. So I'll be releasing some more of the August trades viz that we've been doing in the Sector Secrets Master, the trades, and also some of the testing that I continue to do for the SPX. All right. So let's see, what do we have here? Good morning. Good morning. And all right, TLT. Hey there, Will. All right, let's jump into it. So if I'm going to look at TLT, I'm going to look at the futures contract. We're long, for example, gold. So let me just step back. Great question. Well, thank you for that. So anytime we're looking at TLT, GLD, QQQ, SPY, DIA, IWM, and anything where there is an ETF that's directly associated with a futures contract. Let's look at the 23-hour version of that market, the more complete version of that market via the futures. So if I'm looking at TLT, great question, Will, because I do have a lot of interest in this. I will tell you a number of our members are long. I did not get a great fill on our setup. We actually got long TLT. My fill was just not great. It happens. And some of our members got better fills than I did, which I'm so happy about. And they're still in this long trade. You might say, Rog, how would that happen? Because we don't do fill alerts in the Sector Secrets Mastery. I don't tell you after I've done something. We actually do setup alerts, which is to say, when TLT reaches this price by the whatever the call or the put, whatever the actual item is that we want to buy. So this way, everyone's got a heads up. When we get down there, some traders just are able to be a little bit more patient, or they route their orders clearly better than I did. So I like to brag on our members. I'll tell you, if I'm not making money on the trade, I love that some of our members are. So here's what I'll say about TLT. We're already in there, Will. So there's nothing that I can do up at these highs. The whole idea was to take advantage of what has been strong, bullish green candles and the daily price movement range. And that was something we did back into the 30th and then 3rd, right in that little window there. So this is where fills are so important, right? Sometimes I might be doing a few too many things. I know all of us can end up that way. We're trying to juggle a few things, and a lousy fill can make a big difference as to whether or not that trade is sustainable. And that's really the way it should be. Good fills do make for easier trades. That's an old saying, and I do believe it to be true. But there's nothing I can do after. This is what now the 3rd candle higher. But these are the 2 candles that I would recommend, Will, you check out, because this is where that window was for us. The 30th and the 3rd. And, I can even throw in the 29th in there. This was a difficult transition, but nonetheless, we want to stay bullish. Notice there's no red candles. So without the red candles, this is one thing that the top tier candles are so great with determining direction. Because the candles are, for the most part, green, think in your mind, long calls only. You're never going to get bamboozled with the whole, oh my gosh, maybe I should be short thing. And you can continue to focus on the long side when a green candle, or yellow, but preferably green, hits the gray zone. And that's the daily price movement range and the top tier candles working together. So what can it tell us about the market? I'm only going to say, Will, great question. What is the higher high tell us? That ZB yields, meaning the long bond yields, are going down, and they should be. To your point, why would it take so long? Well, remember 2 things about bonds. One, they like to front run 3 to 6 months. So a lot of the expectations we have for September were baked into the cake by, say, June, by May. Right? So now that we're moving forward, bonds are actually looking ahead, likely to maybe December, January. I would say probably January, that the rate cuts will persist. So anytime ZB goes up, that means yields are going down. We would expect yields to go down because we have a series of rate cuts coming. And usually I count on the bonds to sort of try to see into the future, because that's what they like to do. And this would really be probably a projection of at least 3 months ahead, which means the bonds are factoring in lower yields, 90 to 120 days from now. And that's the way that I've always perceived what the bonds are telling us. So thanks for the question, Will. And we'll see what the next opportunity is for us to get long the TLT. All right, next up is Ren asked, does Estimize provide whisper numbers? They provide a completely different kind of number. I am by no means an expert in what they would call it. They probably could describe it on their website better than I could. But here's what I'll say about Estimize. What it provides is more of a crowdsourced number. I don't know the calculations behind whisper numbers, but we know there's company guidance, there's Wall Street expectations, there's the consensus, and then there's this whisper number. Estimize is more related to a whisper number, but it's a crowdsourced, and I find it to be the most accurate in terms of that. All right, and by the way, they probably have some better explanation than I gave you of how their process works. I'm a fan, and I've used that site for many years, and so that's kind of the way I view what the information is that I get from Estimize. All right, next up is, let's see, Jas asks, do I have Pepsi calls? Yes. So Pepsi's an interesting story in risk management. And if we're thinking about, again, one thing that all of us, right? It's not very often I'm going to say always, never, or all of us. This is an all of us thing. Account growth is really synonymous with risk management and position sizing. And Pepsi is such a great example of how we can have pretty much a 3x winner and still have been stopped out of a leg of this. Wait, Rog, what are you talking about? I'll tell you right now. So Pepsi was a trade that we entered. And when a trade alert goes out, what I share with everybody out in front, not later on as an ad, as an initial view of the idea of the trade, we put in anywhere from 1 to 3 entry triggers. So everyone knows the entry price ahead of time, and everyone knows how many entries we are potentially going to have. The reason adding doesn't work is because it is going to subjectively increase the position size of a losing trade. It is almost always that, right? So let's say I put in 1 trigger to 3 triggers. Now you can allocate how many dollars to each trigger you're going to dedicate, as opposed to saying, well, I'll buy this number of contracts. Oh, we have an ad. Oh, let me add another number of contracts. And before you know it, this is increasingly adding risk to the account, right? So keep that in mind. And this is where Pepsi was such a cool trade. We had 2 triggers. That means that I had 2 different prices that I got in at Pepsi. Aggro, moderate. My aggro trade lost the allowable number of dollars that I was allowed to risk. You have to have a level of risk that is identified when we put the trade on. So I ended up cutting that leg of the trade. That leg, I had 2 legs, right? Again, both were part of the initial trade idea, not an ad. So there was a moderate. And the moderate, we paid, and I'll tell you right now, because it just kind of course, usually, I'm terrible about remembering numbers. I'm always amazed by those golfers who can talk about a tourney and talk about the 3rd day, 8th hole, and the 3rd shot. Blows my mind. Yeah, I'm terrible. I try to forget winners and losers as quickly as possible, and it's given me sort of a Dory the fish complex with my trading. I think having a short memory is beneficial. We paid $355 per contract for this, and we just scaled out yesterday at $950. But my first leg went from, I believe it was $395 to $296, and I cut it, right? But I still had this position on, and notice there's 40 cents difference between these 2 prices, right? And so that's where Pepsi is right now. We got in at $355 per contract, $355, and trade's still open, The most recent scale was $9.50. And these are the Pepsi September 21 70s. And that's just a little bit of a sample of what we do in the mastery, in the way that we do it. All right. So then let's see. Yeah, bots reminding me I got a lousy fill on that one. Probably, but again, what's so great about that is because we do setup alerts, everyone has the chance to price out those options at the same time I'm doing it. And then everyone has the choice to say, you know what, Ron, this might present too much risk or I don't like it, but you've got a fair shake at least understanding the trade. And that's the whole point of putting a setup out there. It's not to tell you to do anything, to show you, hey, this is what's possible and does it fit your risk and reward scheme. All right. FSLR, sure. It's bullish, neutral. It's just not a pretty chart. I would, here's the thing. If I'm looking at FSLR, it's not that there isn't a setup here, right? Before we say, what is the trade? Before that really comes why, right? Why does this particular symbol deserve my attention? So I can talk about what the trade is. And that's going to be pretty much this area between the Darvis area here. You can use the anchored VWAP. We're above the equator. I'd love to see price stay above the 200 major psychological level. But that's the what of it, right? But the why is where the wheels fall off the wagon for me because, when I look at the broader averages, when I look at the sectors weighted within them, the individual stocks, Panthers, I would say there's just better things to trade. So there's the what of the trade, which I'm happy to share with you. But I'd be remiss if I didn't add in, well, why of everything out there, of this sea of stocks and ETFs and futures contracts and everything that we have access to, why this one? And I always ask myself, why this one? So when we got into something like we just talked about Pepsi or Coke or gold, right? Why that? Why that symbol? And it usually has to do with being an outperformer. It usually has to do with, in this sea of names, there's strength, and this is the strongest of them. And that's a lot of kind of going back to account growth, what you trade. How are you going about determining the watch list? Because, there's that old saying, you can do the right thing, but for the wrong person. It's a terrible feeling. Well, you can put on the right strategy and execute it beautifully for the wrong stock. And if you do that often enough, it just won't lead to account growth. So to me, I'm not saying that FSLR can't move, but again, I think it goes back to why that name? Why would that deserve to be on the watch list? And think of that watch list building process as another key to account growth, which is why we're all here, right? Which is why we're all tuning in at 9 a.m., 30 minutes before the bell rings to get a jump on this game that we know we can win, but maybe we're struggling with some of these really foundational concepts of what we trade, how much we trade, and how much do we risk, right? Get those three things right. It's not about a particular strategy. It's not about a particular secret squiggle, right? It's about getting those processes right. And then if you rinse and repeat that, now you've got a formula that's repeatable, right? And that's really what account growth is. It's the boring stuff. You talk about athletes. When an athlete reaches a certain level, we go, oh, what's this fancy trading you're doing? And they'll all say the same thing. I work on the fundamentals. I work on the basics until they're not even conscious anymore. I just do it right the first time. Yeah. All right. So let's see what else we have here. CEG, XLU. Yeah, Bob, I like XLU. This is a sector we've been talking about in the mastery for a really long time. And I love that you're looking at it because it's one of those uncommon sectors that, frankly, that's just not really on anyone's radar. So I'd love to see it on yours. That's fantastic. So what would we do? So CEG, of all the names that I'm allowed to focus on, I got to tell you, Bob, that's the one that I would say we want to leave alone. And here's why, right? We want to focus on the trend and momentum of the individual names within them. My 2 cents is Dominion, Duke, Southern, NEE, maybe AEP. Look, if the tide continues to move higher, keep an eye on CEG as it closes in. But here's the thing: if you're not using the Bob, if you have the top tier candles, which is a premium tool, use them. But if you don't, at least put the classic grab on your chart, because what it would have done is show you we were neutral to bearish, and it would have easily differentiated between why to stick with NEE or Southern or Duke or Dominion as opposed to it. But I like the sector. I like the sector. As far as support goes, keep an eye on the propulsion. I'd say that's going to be where, if anywhere, we want to see some support, and you want to see XLU move higher as well. Okay, Bob, but this is kind of going back to what you trade, right? Having that watch list. I love where you're looking. I just think there were better stocks in that group. But thank you for sharing that. Okay, gang, as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other.